What's going on, Dividend Chasers? It's the Dividend Bloodhound here with another investing episode. Welcome to my first ever weekly Trading 212 portfolio review. I know I've done a few in the past where they've came monthly, but from now onwards they're going to be coming week by week, shorter videos, but definitely more out there to keep you even more in the loop with developments within my portfolio, especially with this portfolio being a growth portfolio with Trading 212 and tech based. We could get movements in the stock prices very quickly. The likes of Tesla and Apple, Microsoft are all quick moving companies and can rapidly change their pricing in hours. Let's face it, especially Tesla, their price can literally fluctuate hundreds of dollars within 3 or 4 hours. So I want to bring you up to date even more often and keep you up to date with my EQQQ ETF that I have in the portfolio as well. So hopefully you enjoy this video. If it brings you some value, that would be absolutely great. If you could hit the like button in this corner here or the subscribe button over here, and even tick that notification bell to get notified when I release brand new content, that would be absolutely great. This week, as you will soon see, Tesla has been absolutely on fire. Along with most of the other tech stocks in the portfolio, there is a huge gathering at the moment of investors investing in tech stocks because they have proved the most robust going through this portfolio. However, through this health crisis. However, one thing that is creating, in my opinion, is a bit of a tech price bubble, and there are some analysts now coming out and saying that it's getting a little bit too top heavy. One sector is dominating a little bit too much. The price of the shares are going up way too quickly, and you're not actually getting that much value in terms of what you're actually buying, because the value of the share is far outstripping the fundamentals, and this isn't being helped by inexperienced traders on Trading 212 and Robinhood, for example. This is what the analysts are saying, not my opinion, that are just jumping in on every single news story and pumping stocks up to ridiculous levels based on hype and news rather than actual fundamentals. And some people are getting really hit in the pocket and hit in the bank account because of this, because they're going all in with their life savings instead of drip feeding in. That is my plan in this portfolio. Is I do understand that tech stocks are a bit of a risk, and we could have another .com bubble come in, and that is something that is a very, I'm not going to say a likelihood, but there is certainly a possibility there that could happen. And if the plug gets pulled, it will tumble, and it will all tumble big time. That's not to scare anybody, but it is a distinct, I would say, less likely, but it is a possibility. But tech companies since the .com bubble back in the 2000s are far more robust than they were back then, and the way they make money has developed a lot since then. So there's a bit of a caveat to that. They have actually got some fundamentals to back them. But I think because investors are looking for somewhere to grow their money at the moment, and not many places are doing it, that is where tech companies are benefiting most from it, with inflated share prices. Tesla at the moment has been absolutely ridiculous. I mean, I only had £10 invested in the share, and I've made £1.50 on it, which is absolutely enormous, bearing in mind I know that's a small piece of money, but that's a lot of money to make on just a £10 investment. If I'd have had even more, you could see why people are absolutely loading up on Tesla right now and watching it ride to the moon. I do believe in Tesla, actually. I do have quite a good affiliation to them. I like what they're doing, I like where they're going, but that won't mean that I'm going to bias my portfolio towards them. I'm going to stick to my strategy and week by week add, or month by month should I say, add a little bit more and a little bit more, and then guess what, if the price does crash, then I could potentially load up a little bit more. But if I did do that, it would be in balance with everybody else if the whole tech sector has declined as a whole. That being said, let's roll the intro, let's get in there. I can't wait to show you what my portfolio looks like now. It's absolutely great. It's a real change from where it was only a few weeks ago. So let's get in there, roll the intro. What's going on again, guys? Welcome into the portfolio. And here you can see then the current portfolio composition is £1,192 invested, £46.95p down. The market is open though at the moment, so please be aware that that will change. I have £1,239 invested, and I've got some free cash of £96 just sat in the account at the moment. So portfolio composition then and update. So Adobe Systems is 35p down, or 3% down at £9 for my small part in that. Airbus for my 2.03 shares is £15 up, or 14%, weighing in at £128. Alphabet is sitting 22p up at £10.39. Altria is at £130, £12 down, or 8.4%. I am looking to sell Altria as soon as we recover to green where I bought in. Then I'll be selling it, and it's done nothing wrong apart from having a slightly high debt load, but I just want to get the money into growth companies rather than a dividend king. Next up is Amazon, 31p up, or 3% on my £10 in that one. Alfria, £5 up on this one, 12.3%, £47 for 12 shares. Spiked up nicely today. Babcock, or Apple should I say first, £10.73. Apple doing what Apple does best, and that is power on towards $400 a share. Just topping out just short at the moment, so I'm 5.5% up, or 56p. Babcock has been one of my recent worst investments. I'm currently 26% down, £10 down. They've never been lower at the moment, if I'm honest. I bought in here and they dropped off a cliff. I misjudged their earnings and the contracts that I thought they had won, but that hasn't affected the share price. It's only sent it lower for some odd reason. BAE Systems sitting in at £39, £2.10 down for 8 shares, or 5%. I'm hoping that this will spike back up again shortly, and I'll make myself a nice £1 or £2 per share, and then I can cash out and go for the high growth stocks again. British Land, I don't think I'll be able to do that with for quite some time. I'm 30% down, or £17. They've been massively hit hard by the health crisis, so I don't think they're going to be getting back up to this sort of level anytime soon, and the dividends have cut as well, so this company isn't much good to me at the moment. Dutch Lufthansa, we know what happened to airlines, and this one is no exception. 36% down, or £9. I'm just going to sit and hold this one, wait it out, and then hopefully when the brakes come off travel and people start flying again, the price should pick back up and I can sell out. Facebook, I've got £11.68 worth, 38p up, or 3%. Forum Merger 2 is 6% down, or 80p. Current position is worth £11. This is the tattooed chef merger that I've also made a video on in the past. This company, I widely believe, will be very close to the next Beyond Meat and will be a Beyond Meat competitor. These guys sell into the supermarket a lot more than Beyond Meat does, whereas Beyond Meat does McDonald's and Starbucks, but I can't see why Tattooed Chef wouldn't get involved in the same sort of things and contracts with food chains as Beyond Meat would. So if that was to happen, you'd make a significant return here. I'm going to add to this position shortly, I think, so stand by for that in the next portfolio review. Next we have the Invesco EQQQ Nasdaq 100 ETF. Currently £2.92 up on this one, the 1.4%. Did spike upwards to over £214.70, but it has since retreated back down. Next is Iron Mountain, another strong dividend payer that I'm looking to pay off, sell out of, and then reinvest the money back into growth stocks. Again, done nothing wrong, and I may consider a repurchase on Freetrade, which was my dividend paying portfolio. I'm 10% down on them, £7. So won't be long hopefully before I can get this back out. If that spike there returns and they can just peep into the green, then that'll be me out of there. These two ETFs here are world momentum ETFs. One is world, one is European. Got some of the best growth companies in the world and Europe in these companies. They're both sort of similar to each other, tracking each other at the moment. So I've got £55, 1.7% up in one, and £40, 1.4% up in the other. Microsoft is next, trading at evens from where I bought into it. £10.17, just £10.16 a share now, penny down on that one. Netflix has continued to bounce upwards, surprise, surprise again, 6.6% up on that one already, 0.68p. Nvidia is at £10, 43p up or 4%. Occidental Petroleum, the worst investment that I've made so far since being in investing, I think. £47 down or 52%. No chance of a dividend coming back from these guys anytime soon. Hit by the oil price crisis, just the same as all the others, but cut their dividend even worse. They already had a high debt burden beforehand. Royal Caribbean is off to an absolute flyer today. It's up at £55 in a day, which is absolutely insane. So I've now got £34 up in my portfolio, or 50% on this one. It was 100% at one stage, so I'm going to hold on to this one. And even when I'm holding it amongst growth stocks, I'm going to hold on to this one because I believe the growth rate will be even quicker than these tech stocks that I've got at the moment. Next up is Salesforce, coming in at £9.85 a share, or 32p down or 3% down. Shopify is in next at £9.28. I've lost 89p on this one, or £8%. Sorry. Tesla, the storming company that it is at the moment, I'm 17% up on this one, or £1.72, which is a hell of a lot to make on a £10 share buy. I can see why everybody else is getting involved in this one. I am worried that there is a bit of a bubble developing with Tesla, but I think as long as I continue to drip feed into them, this shouldn't be too much of a problem because it will average out over time. Tortoise Acquisition is something that will become Hyliion, or SHLL. Now we know that this is a awesome company, I believe, and it's got some real potential to do some good in the trucking industry. I'm going to definitely add to my position in this one, use some of my free cash to add to this one. Has taken a bit of a dip recently, so I think now might be the time to add a little bit extra to my position, and then when they do properly IPO and they trade under the name Hyliion, I think that this company could easily go to $50-60 a share, just like Nikola, comfortably. TUI, I'm hoping to take advantage of the return to flight that we're going to have soon. I've got £37.87 with them for 10 shares, currently 3% down, or £1.16. But anything like an increase to there, or back to where it was trading at before, £8 a share, that is a long time away, and that is a debate I will have, whether the money is best served in these guys, or if I should sell out at a profit and then move the money into the tech companies. And then last but not least, we have Virgin Galactic, 3 shares, £9.66 down, or 17.9%. I do massively, they're creeping along, Virgin Galactic are. They're not quite as famous as SpaceX are, but they don't do, because basically their area of expertise is suborbital, so they don't really leave the planet, but they can make you weightless, and they can take you to, depends what your definition of space is, but they can get you there. And I do believe in the tourism element of this company, and I believe that they'll be making plenty of money soon to hopefully make that go forward and bring the share price back up again. If you look at where it was before, that is a ridiculous pump and dump there, but I believe that we can get back there just slowly over time, bit by bit, as we edge closer to making this commercially viable. We also had a dividend paid by Altria Group at £2.28. and then you can see my buys there as part of my pies in my portfolio. And if I take you back to that, you can quickly see that I'm on track with my portfolio at the moment. My FAANG Plus Make Me a Millionaire in 15 Years portfolio, currently 2% up on the investment, 0.02% towards my goal, but hey, at least it's some progress. There is the major holdings. You can see that Microsoft, Shopify, Salesforce and Adobe are down at the moment, but everything else is in the green. And then you can see that I'm on track to achieve my goal in 15 years with just 17.9k contributed. That being said, that wraps us up for this episode. I will see you back in the outside world. Catch you in a minute. What's going on, guys? Welcome back to the real world. Thank you very much for staying and watching to the end of this video. That's absolutely fantastic and very generous of you to do so. Hopefully this video has brought you some value. So if that is the case, please hit that little like button down there in the corner. That would be fantastic. And if you're brand new here and you've never seen this channel before, it would be fantastic if you could subscribe over on that side, please, and even tick the notification bell so you get to see even more of my portfolio reviews. And then when I release stock picks in future episodes, you can take advantage of them and have a look into them yourself as well. That would be absolutely fantastic. And that just leaves me with one more thing to say, and that's thank you so much for watching. I will catch you, hopefully, especially if you've subscribed and ticked the notification bell, I will catch you in my very next episode. This video has been a pleasure to bring to you all. I hope you enjoyed it, and I will see you in the next episode. Goodbye, see you later.